Boeing caught in the middle of the ongoing tit-for-tat between the U.S. and China as the trade war continues. Beijing ordering its airlines to halt orders for Boeing jets and any aircraft-related equipment and parts. That's according to reporting from Bloomberg News. Joining us now with more, Monica Guerra, Morgan Stanley Wealth Management Head of U.S. Policy. And Monica, just as we are talking here, a headline crossing, the EU expecting U.S. tariffs to remain as talks make little progress. And you can see the stock market flipping into the red off the back of that after being up throughout the morning here. Where do you see these negotiations heading? Do you have hope that these negotiations will end in better than expected tariffs on a country-by-country basis?
So I think it's anyone's guess at this point, and this is just proof of that. We've been talking a lot about continued market volatility. So even though we received some positive, right, some upside on the 90-day pause, we've been cautioning investors that it could change at any second. Now, what's important about that is that we want to focus on what is coming from Trump, not what's coming from his administration or his advisors, because we're getting a lot of mixed messaging there, and that's adding to the volatility. So we'll see what happens with the EU. We still don't have a final word on that, but if it looks like it's slow going, they still have that 90-day window, right, to essentially work through these negotiations. It's still early days if you're thinking about that time period.
And let's stick to China specifically, because obviously they are taking a company approach with this Boeing news from first reported by Bloomberg here. Do you anticipate that being a tool for China moving forward, that instead of ratcheting up these triple-digit tariffs that start to kind of lose their punch after they get to a certain point, that they'll start having these kind of company-by-company specific punches at the U.S.?
Yeah, anything's on the table, as we can see. And I know I said that in reference just to the negotiations, but also with what we're going to expect from other countries. The other thing that we're watching is, could there actually be coalitions of nations coming together to ban with a consistent tariff front or a new non-tariff related trade policy? So this could ratchet things up from a U.S. perspective, but also really emphasizes the need for the U.S. to still be an importer. Because even though we're having higher tariffs, right, and we're incrementally raising them, we have to continue that import-export relationship. We don't have a reindustrialized country yet, right? Yeah. So if we're trying to reshore and onshore, that hasn't happened, and I think this is China proving that point.
Well, and then the other thing we're seeing now is the Chinese cutting back on exports of raw earth materials and critical materials in the semiconductor supply chain, auto supply chain, which really, one of the things that we learned during periods like COVID, and even when there was an earthquake in Japan a decade ago, which hit the semiconductor supply chain, is if you hit specific parts of the chain, you could do a lot of damage. I think one of the big next events is President Trump and President Xi start talking. So if we get that headline, how do you think the market proceeds on that? Is that just another piece of volatility, or is that something that could turn this whole cycle?
Another piece of volatility, especially since, if I'm going to bring it back to your semiconductor comment, we are undergoing a study, not just on supply chain, but production, inputs, rare minerals, and we're looking at essentially implementing a VAT-like tax on semiconductors that could ultimately increase the cost of smartphones and electronics. So even though we got a reprieve there's all of these nuances that are going to shake out. So yes, a conversation with Xi, I think, would be viewed as positive because we haven't come to the table yet. But that doesn't mean that there isn't all of this work happening in the background that could still have important implications for the U.S. consumer.
And how likely do you think that is, given that President Trump's tactic here has been asking for a phone call that he has not gotten at this point? Like, how likely are these talks to happen? What is it that could potentially make these talks happen?
I don't have the insight into that. I wish I did, because then we'd be the first out, with a formal view on the direction of that negotiation. But for us, what we want to watch as we head up to that is, how far does the U.S. pull back? I think that could be an indicator. So not just the ramping up of tariffs, like you were saying. At some point, they sort of lose their punch. Mm-hmm. It's, do we start to really make inroads with Mexico on rare minerals? Do we fully decouple in a way that's meaningful, where we hit back from those non-tariff related trade concessions? Mm-hmm. And that could get both players to the table, and we're starting to see that non-tariff piece become the critical moment here with China.
I also think this earnings season and next earnings season is really important, because we have to hear from CEOs, how they're responding to all of this uncertainty. My guess is the first step is freeze. You slow down hiring, you slow down investing until the coast is clear. But the shoe that I worry that's going to drop next is if they see consumer spending, if they see a hit to demand, do they start laying off workers? And then we get the dynamics of recession.
And those businesses, by the way, just to mention some news here, small businesses now suing to block these tariffs as well. So I'm curious from your perspective, Monica, where does that leave small businesses from here? And are they going to have any success? Because they don't have the power that a Walmart has to negotiate with this administration on supply chains.
Well, if you get a big enough, mass, right, and people come together in a single lawsuit, that could change the dynamic, right? You get more power there. You don't just have to be a Walmart, right? There's many ways to get legal action through the system. Mm-hmm. What's important there is that they're challenging the way that these tariffs have been implemented now since the 70s. Really aggressively, Congress has turned over the keys on presidential powers with tariffs. The question is, are these illegal? Do they actually fall under the different codes in the actual tariff code, like Section 232 or others, and can they actually move the needle? So we don't have the answer on that yet, but there seems to be some cracks in the administration's argument. Otherwise, these small businesses wouldn't have had a case, right? So I do think that this is going to be really interesting, really dynamic. Doesn't mean they're going to win, but it is going to shine the light on the possibility that maybe the tariffs aren't explicitly line itemed in the way that they should be.
There's also hope that corporate tax cuts will be continued and potentially extended. But an interesting stat from this morning's Bank of America Fund Manager Survey, over 60% don't have faith in TCJA as the next big catalyst for the stock market. How are you thinking about those tax cuts and whether or not that's going to be the policy dessert that investors have been waiting for? That's
a great question. So with TCJA and the tax cuts, they're pretty much priced in, right? This is the known. As a consumer, you're not getting anything really new unless you get some, wiggle room with SALT and other areas. No tax on overtime, no tax on Social Security. The risk here, I would say more than the benefit, is to that corporate income tax, the top line income tax. So they're talking about lowering it 6%, which is a huge cut for corporates. And if they don't get that, then it's essentially an opportunity to disappoint markets. Now, where you could see, I would say, some positive action and a relief rally, don't think it would last long, but you'll get some relief in response to a passage of a bill, is that the tariffs are actually being earmarked as a pay-for those revenue losses, right, from the tax cuts. And so even though there's going to be negotiations on the margins, we're going to still see things hammered out with Europe. We're still going to see a back and forth with China. The core tariff framework is going to need to be set for the CBO, the Congressional Budget Office, to score that and actually allow the Congress to pass the bill. So that creates a certain level of certainty. While it's not perfect clarity, it creates a certain level of certainty for investors to get off the sidelines. They understand their tax framework. They understand basic tariff 101, if you will, and then we can put money to work from there.
If I could follow on to that, I think it's a critically important point, and it relates to what's different between now and 2017, 2018, the president's first term. In 2017, the story was a large corporate tax cut. There were tax cuts for individual income tax rates, but it was really the corporate tax rate that went from 35 to 21%, which was totally reset. Yeah. It's hard, as you just said. It's hard, you're not gonna cut that another 15 percentage points, right? So you're not gonna get that kind of tailwind to the economy and corporate profits. The problem, if you go to 15%, as some people are talking about, is you now have a budget deficit that's $2 trillion and heading towards $3 trillion. And in terms of taking the tariff money and using it to pay for a corporate tax cut, if you do that, you're not putting it towards reducing the deficit. You also have individual income tax giveaways that you're talking about doing. I think what we're seeing in Congress right now, what we saw over the last few weeks was they're throwing away the idea of deficit reduction. Yeah. And this links all the way back to the bond market. What we're seeing in the bond market is people saying, well, wait a second, That's not going to work. And so the risk for Congress is they advance a plan that doesn't do anything on the deficit, and then you get higher interest rates. And the pieces of the puzzle don't fit together.
They certainly don't. And right now, you're continuing to see yields moving to the upside off the back of some of these tariff headlines as well, to your point, John. So thank you so much. John Hilsenrath going to stick with me for the rest of the hour. And a huge thanks to Monica Guerra for joining us as well. Great breakdown. Really appreciate you always.